Let's understand the concept of goodwill in CFA level 1 syllabus. So what is goodwill? Conceptually, what it means is, for example, if you take the example of Baiju acquiring White Hat Junior, right? Now, for example, since we don't have the actual values, but let's suppose that the net assets that the company holds, White Hat, is 1,000 crores. But if you look at the market data, that Baiju is actually paid 2250, right? So now, if you look at from a balance sheet entry point of view, right? So this asset that you have, the 1,000 assets, right, would come in the Baiju's balance sheet. So let's say White Hat Junior has come in with an asset of 1000 crores, right? However, the cash which has been paid to acquire this company is about 2250, right? Now what has happened is the remaining amount, which is basically 1750, right, is an extra amount which basically is not accounted for, and that exactly is recognized at goodwill, which is basically an intangible assets. If we have overpaid, right, so for, let's say, this is the initial year, right, and this is later year. So in later years, let's say we realize that, okay, actually the acquisition has been overpaid for, where actually the company should have paid, like, let's say 1500. Now let's say the goodwill value which remains is, let's say, only 1200. So there would be an impairment of the difference amount, which is somewhere around what? So this is what will cause this value to be reduced to, let's say, minus 500, and this would be recognized in income statement as goodwill impairment.